GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. We're going to cover the major forex pairs. We're going to have a look at the commodities, including gold and silver, oil, and look at the major indices, the S&P 500 namely, and Bitcoin. Anything else you'd like us to cover in these videos, drop us a comment, or any other comments you have, drop a comment in wherever you're watching it. Otherwise, just click the like button. That helps us spread the word about these videos. So the theme at for most of last week was quite a big drop off in the US dollar, and it's only just of late that we've seen a bit of a kind of retracement of that, a bit more of a rebound in the US dollar. The big number at the end of last week was non-farm payrolls, which drastically missed expectations. So that's having people kind of revise their bets a bit. And then for this week, the big one probably for currency markets is the ECB, although we'd also have the Bank of Canada and the RBA out making decisions too. Check out our week ahead video for the analysis of that fundamental picture. Today we'll be focusing on the charts, and I will start with the Eurodollar. Now you can see the picture here is that we've just rallied strongly from 117. We've been talking about the currency in a positive light, really most clearly since we had this bullish engulfing through the 20-day moving average. That was clear the trend was changing. We broke above 118, moved up, but tested this declining trend line, hit 118. Tested the trend line again, tested the supply area created there, and then we rallied up and we touched 119. Now, the uptrend is still in place, but given this long resistance that's been in place since the start of July, so we're talking 3 months now, that's quite sizable resistance, and it would be natural after quite a decent run up of over 200 pips, that actually maybe we get something in the lines of a 50% retracement. So if we've gone from 117 up to 119, I think probably at this stage it would be normal if we got a drop back to 118, and the people who've been buying in this area can collect more orders to try and push the price up again. And maybe we ultimately fail at 119, but it does look like we've turned a bit of a corner, and does look like we've got a good chance of moving up towards 120. But I suspect we haven't had many deep pullbacks in this recent rally, and we may not again. We may just, this was the broken supply area. We may come back, test it, and just rebound and go straight towards 120. That's certainly a possibility. I just suspect we have a slightly deeper correction to 118 and possibly lower. Possibly we just stay in these kind of generally range-bound conditions, and then people try and pick up bargains again at lower prices. This idea is supported by the RSI, which keeps bumping into the overbought level, but hasn't gone really overbought, just hits 70 and sells off. And I think, there's not really a decent trend line here, but you see if something like, if we kind of break down from this rising trend line and then through down to the 50 level, I think it's down near the 50 level that would be the opportunity to buy, and then we'll watch to see if it drops through the 50 level. Then, if we're heading down towards 30 oversold, then clearly it's not really an uptrending environment. So that's all looking forward a bit. We're not there yet, but just to look out for when we're trying to buy the dips on the declines to decide whether that's still a good idea or not. Okay, switching gears to the British pound. You can see similar thing here where we've come into the 70 overbought on the 4-hour chart, and it's also the resistance from those highs back in early August. So we're dropping back from there. And again, it sort of seems natural that this just below 138 up towards 138, that was resistance for most of August. We broke out right at the end of the month. We've come into this resistance short of 139, and it kind of makes sense if we just come back and test 138 again. But as I say, we might, similar situation to the euro, we're just testing this demand area now where we've got that last little leg up. So it's possible that's enough, and then we push up higher again. I just suspect maybe we get a slightly deeper one. But it probably depends on what the ECB say and whether that's positive or negative for the euro, and the British pound will probably move in a similar direction. Moving on to the yen, so we're still, we're in a contracting range. So the range was up sort of just above one. Let's look at the daily chart. You can see the range was sort of roughly this, below 108.50 up to 111 sort of thing, but it's contracting, and now we're pretty much just down to above 109 and just above 110, and that's the range. I think if you how I'd view this is that something like this was the uptrend, and then we dropped sharply through it, and now obviously people bought this dip expecting higher prices again. We haven't quite managed it, and you can see how we're just getting skittish along. This is a 120-day moving average, but looks similar for a 100-day moving average. I think we're just skidding along with a 100-day moving average as support, and I think when that 100-day moving average gives way, that could, that's the sign that actually we got this. This was the uptrend. Why isn't that clicking? There we go. It broke. The uptrend broke. We're getting the recovery rally. Sort of this, and then it just seems quite possible that we'll have the next leg down like that. And obviously the alternative is move up, but this just seems to be the powerful move down, a rally up, but stalled at the resistance. Next one is this stalling, going nowhere, and it seems like we could get another drop down in dollar yen. Seems like the most likely scenario, just the way this price action is moving. Moving on to gold, another very interesting one, because it's been very clean, this chart, since we had a drop through the flash crashed, enabled us to kind of flush out all the sellers. Buyers came in en masse, and that sort of has been a theme for the last year since we topped in gold. And gold does tend to be quite symmetrical in the way it moves, so it's basically been a year since it topped, more than a year now, in July last year, and now we're into September, and it sort of looks like gold is setting itself up for a real big attempt to snap out of this range and resume its bigger uptrend. If we look at the weekly chart, big rally up, and then a year, this is obviously a long time frame chart. It took a couple of years from 2018 to top in 2020. Now we've been correcting for a year, 2 years rally up, year correction. Maybe we're gearing up for another year or so of rally. If we this has been the correction, maybe that flash crash was the final flush out. That's what we said before. It looks increasingly the case. We've got this barrier of this resistance in place around 1840 for now, then the declining trend line. And then these series of peaks, but I think through that declining trend line, it's going to start being increasingly clear that gold is the upside momentum is continuing. We're going to get a retest finally of the 2000 mark. So for now, here's the resistance. It's about 18. What was it? I said 40, but maybe it's 35. That's the big one, and like the pound and the euro, probably it's a pretty strong resistance. We probably get like a slightly deeper correction from there, but I think once we get above it, that's certainly looking very positive for gold. And obviously the common theme for all this is just a weaker dollar. Moving on to silver, this is the daily chart I've got it on, and you can see we're just still in that range, but just the positive thing that we noted at the end of that flash crash was that we basically held the bottom of the range, and we've rallied up, tested the bottom of that declining channel, held on to 123, rallied up. Now we're testing the top of the channel, and it would sort of make sense again that we have a bit of a pullback from the top of the channel, and then that's when we need to, if I drop down, if we get a pullback down to basically the broken resistance, or this, this was the supply area that we talked about for a while. We got the big breakthrough it last week, come back, test it. Buyers load up and send us up through the declining trend line and up to this where the big sell-off started around 26. So in all of these, the chart really tells us we're in a downtrend, but the last part of the chart sort of tells us it's potentially reversing to the top side. Okay, moving on to oil, it's actually a slightly different picture, where you can see that we ran into a very clear, this wasn't really a proven trend line. There was only 2 touches, but there was a previous peak here, and then it just did once, bounced off the resistance, tested again, and this, with the benefit of hindsight. Well, I say with the benefit of hindsight, this arrow is from when we pointed it out in one of the daily articles as a potential trade opportunity, that it would, if it fell off the trend line. That has happened. But yes, you can see a couple of kind of doji looking candlesticks tagging the trend line here, and then the confirmation sell off. And now we come back down to this little mini demand area. If we are going to sell off further, which I sort of suspect we might, then we've got the sort of the golden area between the 61 and this 50% Fibonacci, and it's where this first leg up from the lows ended, and then we had a little correction, then we had the next leg up. So that potentially is an area, as is, I haven't actually drawn it in, but there was a well-established area of support just through these lows here, which is about 67. So moving on to indices, we're still grinding higher in the S&P 500. 4,500 has pretty much been taken out. We're 4,550 basically now as the top of the most recent range. And, it's difficult to find a reason to not expect that this just little sideways pattern breaks to the top side, as it has most of the time previously. Obviously, just look to the the bottom of the range here is also where the 50-day moving average comes. Oh no, it's the 50-day moving average is obviously down here. That would be the target if that short-term range breaks. If the 50-period moving average on the 4-hour chart breaks, then you would look to the 50-day moving average on the daily chart as a support, like it's been on recent declines. And then if that gives way, that's when we probably are in for quite a bit of a shocker, maybe a move down through 4,000 before people gather their composure and the Fed says something or whatever the case is, and people start buying in again. But some big decline does seem like it's got to be pretty close. I think I've said that for a couple of weeks now. It's hard to time the top, but certainly look out for the potentially very explosive down move opportunity. If it's not this week, maybe it's the next week. It does feel like it's got to be soon. And remember, September is a very volatile month, typically the worst month seasonality wise. Again, as we discussed in the week ahead video, it tends to be one of the worst. Last but not least, interesting that the Bitcoin over the weekend gapped up over the supply area that we've had drawn in for the past few weeks. If I just stop the scroll, and you can see this is where we had that big sell-off with the bounce, and then we formed that kind of resistance, and then we had the big sell-off again when the market really started to collapse and had that last flush out lows. So we've made it back through. There was obviously sellers waiting from when they initially sold to sell into it again. But, the market's managed to gap above that area, interestingly. So that looks kind of positive for Bitcoin. And obviously, we basically moved back above the key 50,000 threshold. So that's good news. The next one is just this big range up here. Maybe I can see it. Ooh, could maybe see it better from the 4-hour chart. It's this consolidation before that big sell-off. So we've already sold off from here. It's hard to imagine that the bottom of the range would cause too many problems, but towards the top of the range and where the price really started to sell off from here, which was about 57,000, this sort of area, where the price really started accelerating down, that potentially could be where the price stalls again, where we're talking about 56,700 through to 57,000, maybe that sort of zone there, to the top up here, which 59,000, which unsurprisingly is just before the big 60,000 mark. But as far as round numbers go, we seem to have we came up to 50,000, we pulled back from it. Now we've rallied up through 50,000. Logically, you would look for a move up to 60,000. All right, that's it for this week. Thank you very much for tuning in, everyone. See you at the same time next week, and don't forget to click the subscribe button so that you don't miss next week's video. Thanks, everyone. Good luck trading.